Hey, this is David Miller with the Miller Group of Keller Williams Realty. I'm here to help you get real estate smart. All right, the real estate stats just came out. Let's just jump right into it. So let's look at inventory. Inventory gone up about 25% in the past couple months, but it did come down about 4%. So I will tell you, compared to last year, we have about 25% more homes on the market than we did last year, which is good news if you're a buyer. That means that there's more homes for you to look at. You have more options, and also means that you have not as less leverage. You have more leverage to be able to negotiate actually with the sellers. All right. Now that brings us to about 3.95 months of inventory. Remember, when it's below 6 months, it's still considered a seller's market. So relatively speaking, we are still in a seller's market, but that could definitely change. Now we look at closings. Closings compared to last year are down about 11%. If we look at the whole year as a total, closings are down about 20%. And the main reason was affordability. As the interest rate shot up, it had people, you could not afford as much house as you could before. So a lot of people were on the sideline. Now we did see in December that the rates dropped quite a bit from 7.8 all the way down to we're about 6.6 right now. So and from indications from Powell, which will affect the 10-year bond, which will affect the interest rates, we're expecting those to continue to drop. Now median price continues to bounce. It actually went down about 2% versus last month. So a lot of that has to do with the extra inventory that was hitting the market, and then the lack of buyers out there. So it's all about supply and demand. As I mentioned, the average interest rate in December was about 6.6%. Now, many of you guys have been waiting to hear from the Swami on what the predictions, that's the word, what's the predictions are for 2024. Well, I wasn't able to get him here, so he wanted me to share the predictions for you. So here's my top 3 predictions. Interest rates by the end of the year are going to be somewhere between 5% and 6%. I'll back that up, 6.25%.
Wow.
So that's going to drive the traffic. That's going to eat away at the inventory. So I expect inventory at least through the first six months of this year to continue to bounce up and down, depending on what's going on with the interest rate. But as we start seeing the economy, maybe a slight recession kick in, or maybe jobless claims go up, anything negative is going to bring those rates down. As the rates go down, it makes homes more affordable, and that brings more buyers into the marketplace. From a pricing perspective, I am expecting the pricing to continue to increase in Central Florida. And the main reason is that we still have high demand. There's still a lot of people that are making the move from other parts of the country into our lovely area. If you just drive on I-4, you can tell that immediately. So I expect the demand to stay high. That's going to keep the supply in check. And if the rates go really low, when I say really low, that's relatively speaking, really low to me is going to be 5.5. That's really going to spur a lot of pent-up demand, bring a lot of buyers in the marketplace, and it's going to get a little crazy out there for you buyers. So if you're thinking about buying a house, I would recommend you do that sooner rather than later. And if you're waiting for the interest rates to drop before you do that, let me tell you this one little tip and I'll let you go. Keep in mind, when you purchase a house, what you pay for the house is forever, okay? Until you sell the house. However, the interest rate that you pay when you first buy a house is not forever. You can always refinance that. And I will guarantee you that the pricing will continue to go up. So if you're thinking about buying now, but you want to wait a year, that's going to probably cost you an extra couple tens of thousands of dollars next year compared to right now. So go ahead and buy now, get the price that you're looking for. That feels high now, but I guarantee within a year or two, it's going to be like, man, I'm glad I bought it that time. I hope that you guys are now real estate smart.